I mean, the major reason for why economists were looking for a bit of an uptick in that annual rate in the CPI indicator is because electricity prices, the rebates that we had both for the states and the federal government are now washing through. And in particular, the $1,000 rebate that was given to Queensland households, that is now starting to fade as households have basically used up that entire rebate. So in the detail, you can see that electricity prices rose by nearly 9% in 1 month, accounting for a bit of an increase in the monthly CPI. But basically, every other category rose by a little bit less than expected when I looked at the major headline outcomes, particularly in the housing components of rents and new dwelling construction costs, which is a proxy for construction costs. And that has been a very sticky part of the inflation basket, and those prices actually fell over the month of January. There was also a bit of upside to food inflation, particularly for fruit and vegetables. There was some poorer growing conditions for things like berries, mangoes, citruses as well. But a lot of that is quite volatile. We know that food inflation can bounce up and down every month. So I would take quite a lot of positive news from today's figures. I think it's quite clear that services inflation is continuing to trend down, and despite this big increase to electricity costs in 1 month, we've still managed to get annual inflation basically at an unchanged pace of 2.5%. So I think the Reserve Bank would be taking today's figures as quite good news in terms of their own outlook for inflation.
Yeah, as you say, we saw disinflation in services inflation. Does that mean that it opens the door for a rate cut in May?
Look, I think it does. I mean, the Reserve Bank clearly is trying to sound quite cautious on the chance for another near-term rate cut. But if you look at the pattern of other central banks around the world who have been embarking on an easing cycle based on better inflation news, I think as long as we continue to get better inflation data in Australia, it will really allow the Reserve Bank to take some of that restrictiveness out of monetary policy. No, we're talking about another 25 basis point rate cut. We have had in the peak of the cycle, 425 basis points worth of rate hikes. Of course, we got a 25 basis point cut earlier this month. So we're just talking about taking some restrictiveness out of monetary policy. It's not like we're cutting interest rates back to, 1%, even 2% levels. Interest rates are still likely to remain high in the next few years, despite the fact that we are likely to get some more rate cuts across the next 6 months.
Now, the RBA emphasis on trimmed mean inflation has recently forecast a 2.7% core inflation for June. And today's inflation trimmed mean 2.8% above that forecast. And we just had a rate cut, and that will, many mortgage borrowers will enjoy some sort of a loan relief very shortly. Are you worried about where core inflation is headed now?
Not just based on today's figures. So we know that the monthly inflation indicator is not a full read of inflation. Not every single component is surveyed every month. In particular, in the month of January, we didn't get many readings on services prices. So this 2.8% figure for trimmed mean inflation is not a complete guide to what is going to happen in the next few months. It is a snapshot in time. In January, the annual pace of trimmed mean inflation was running at 2.8%. We think over the March quarter, though, that the annual pace of trim mean inflation will be somewhere at around 2.7%, actually. And on a quarterly basis, we see quarterly inflation, the quarterly trim mean inflation running at about 0.7%, whereas the RBA's own forecasts are for about 0.8%. So today's figures don't actually change our view on that trim mean outcome. I think that the path for trim mean inflation or core inflation, whatever you want to call it, is still to the downside, and that's sort of key for the Reserve Bank. We think that by the middle of this year, we will see core or trim mean inflation running well below 3%, so the top of the RBA's target band, and that should be considered as very positive news for both Australian households and both for the Reserve Bank to keep on giving some further rate cuts this year.
Yeah, as you mentioned, the monthly number isn't as comprehensive as the quarterly number. So how important are today's figures? I mean, we still have a couple of months to go before the first quarter data being released.
The monthly CPI indicator, it's not even called an inflation index, it's called an indicator, and that's quite important because the ABS knows that is not a full read of inflation. And the Reserve Bank has said themselves that they do look at it very closely, but will they move policy based on 1 month's worth of data on the CPI indicator? And the answer is no. They wait for the quarterly data. It's a good way to sort of keep track of how monthly changes in some goods and services are moving, but you can't completely hang your hat on today's data. It sort of just gives you more of a guide as to how inflation is tracking, and it gives us a good guide as to how our March quarter forecasts are actually shaping up. And today's data confirms that March quarter inflation is likely to come in line with our AMP's own assumptions, which is for a continued downtrend in the pace of inflation.
And what will the RBA be looking at ahead of its upcoming meetings, Diana?
Today's monthly CPI indicated they will be looking at the components of that, particularly in services prices, and the labour market figures are obviously key. We saw a bit of a tick up in the unemployment rate last month. If we continue to see a further tick up in the unemployment rate, I think that will worry the RBA that they need to move rates down a bit quicker than they're currently expecting.